We get Good afternoon, everyone. If we can try to get started. We got several bills to go over today. Representative Yerda, would you open us up in a word of prayer, please?
Let us pray. Dear Lord, we thank you for this day. We thank you for the opportunity to gather here and serve the citizens of Georgia. Offer us guidance and wisdom in those thoughts and decisions that we make today. In his name we pray. Amen.
Amen. Thank you, everyone, for being here today. We're going to start with Senator Chuck Hufstetler. Good afternoon, Senator. If you'd introduce your bill to us.
Thank you, Mr. Chairman. Okay. This bill is brought about to help protect the elderly from financial exploitation. The U.S. Department of Justice on their website states that over 10% of our elderly will be exploited in each year. It also applies to those that are 18 to 65 that have Alzheimer's or dementia or some sort of mental incapacitation. I fit in one of those groups, maybe both of them. Leave that to y'all's judgment. But
Excuse me, Senator. Is this? Would you read the LC number, please?
yeah, the LC number is 500463.
Thank you.
And what this bill will do is quite often when someone takes advantage of our seniors, and it could be a complete stranger or it could be a nephew, that by the time they get to it and find that out, the money's gone. It's not ever coming back in many cases. And so 31 states have put in this type of protection for those that are in the financial security dealer broker business that says if they question that maybe there's something wrong with this transaction, they can put a hold on it. And from what I've heard from other states, when they usually think something's wrong, it most every time is. And so they've got up to 15 days to evaluate this. They should contact the Commissioner of Financial Exploitation, which I found out and we talked about in the code. That's the Secretary of State's office. And Nuala Zaharis is here. I think maybe she might want to talk a minute or two. She's been doing this since 2014 and helping track this down. But they've got up to 2 days to let him know that they question it. And then there is 15 days total to decide if this needs to be held or not. In some circumstances, by a court order or the commissioner, it could stretch out to as many as 25 days if there's something unusual, but something that should be resolved pretty quickly. We've had people come in and repeatedly take people's money, and they felt like this is wrong, but they didn't really feel like they had a legal way to stop this. And so this would bring the Georgia law up with, as I mentioned, many other states that have done this, and allow them to put a pause and see if this person is being exploited or if it's a legitimate removal of their funds. I'll answer questions.
So if it smells like a rat, it probably is a rat, and we need to do some investigations. What you're telling us this bill does.
That's what the other states' history has shown, yes.
Okay, thank you. Number two.
Thank you, Mr. Chairman, and thank you for presenting this bill, and thank you for your concern when it comes to exploitation. I just want to be clear. So the person being exploited, they are expecting money to be dispersed to them,
No,
or someone is trying to, I'm just trying
They're
to.
removing funds out of their account.
Removing funds
on
out of
behalf of, it could be a stranger or a relative, and if there's reasonable cause that says this may not be right, then they can actually put a halt to it and do a further investigation before they disperse the money.
Right,
Right
so-
now, they don't have a way to do that.
Thank you. And then the second question, actually on line 23, and you kind of alluded to it. It says a person 18 years of age who is mentally or physically incapacitated. Is there a reason why a person who might be physically incapacitated would need to be in
They
this?
may not be able to come and do the
Communicate.
transaction themselves, and so somebody may be doing it for them. They can't show up, and someone could have their access to some of their records and then be taking advantage of them.
Okay, thank you.
Thank you. Number 18.
Thank you, Mr. Chairman. Thank you, Senator, for bringing the bill. Now, help me understand about if a qualified person has reason to believe that something is going wrong, then they can create this pause. So, am I correct in understanding that the person or the agent who's dealing with the elderly person would have done all the usual things, such as looking at their risk tolerance and so on and so forth before they get to this point? And tell me how often this happens and who is this qualified person? Just explain to me what it looks like, how that's going to work.
Well, as I said, the U.S. Justice Department says over 10% of our elderly are exploited every year in some manner. So I don't have, and some of the experts here may have better numbers on that. But what it would be is if you're a broker or dealer, securities, then you would probably, when somebody comes in, I imagine they would run it up the flagpole and say, I've got question to believe here. And they would say, yeah, it looks suspicious to me. And say, we need to hold on to this transaction. They immediately report it, no later than 2 days, but they should immediately report it. And then they investigate it further to say, it may be interviewing the person themselves, but checking to see, is this legitimate? And it could be, somebody over the internet that has gotten access to their records and they're thinking this doesn't seem legitimate, even though they seem to have their paperwork in order. And in that case, they could hold it and make sure that that person is aware of what they're doing.
Thank you. Number 9.
Thank you, Mr. Chairman. So I want to make sure I understand who this bill involves. So it's an investment. It only involves investment accounts. It would not be a checking account or any other financial account at a bank.
Right, it would be your securities division of type.
So
things.
if a customer were to write a check on their investment account, then the broker, the financial advisor would have 15 days to.
Well, it would actually be the Secretary of State's person who's here that has been doing this since 2014. They would actually do the investigation. They would report it to them within 2 business days. Then they've got 15 days to investigate it and see if it's right. If somebody comes in and says, hey, I've got authority here to clean out this 401k account, and they say something just doesn't feel right here, then they could
Correct.
say, well, I'm going to hold the money till we make sure it's legitimate. Right now, they can't
So
legally do it.
it's not a clawback. It's just a stop the transaction if you catch it in how many days?
Well, it would be at the time, once they get the money, in many cases, particularly if it's off the internet or something like that, they're gone. The money's never coming back.
That's what I know. That's
So
what
this
I
is trying to stop it before the money gets dispersed and saying, we have reasonable cause to believe that there's a problem here, and we're going to hold this and make sure we check with some people, let the Secretary of State's investigation group get involved and make sure that this is legitimate before we let the money go. It's worked pretty well in 31 states. And as I mentioned earlier, they've told me that when they suspect it, that just most all the time that there was a problem. They don't just, do this of everybody.
Okay. Well, I'm not.
And I'll be glad to
Understood.
let the person that does it come up if at the chair's pleasure.
Okay, we've got 2 more people wanting questions, and then we'll have someone come up to speak.
Okay.
That's all right. Chairman Ridley.
Thank you. I guess my question would be, so if a person comes in my office today and I'm a broker of some sort, and they write me a check to start an investment account, and I put, I have to send that check because of SEC rules. I've got to put that check and send it in to the person's, whoever I'm dealing with's account. Am I going to have to hold that check now for 2 days before we can send it in, or how's that?
No, it's not so much them giving you money as them coming and getting money from you. If somebody else comes on behalf of them and says, I'm here to clean out this account and here's my authority, you can say, well, wait a minute, we've got a question here.
So so if somebody does that, then we're going to have to give them 48 hours before we can
We
do
would,
the money?
within 48 hours, it's reported to the Secretary of State's division, preferably right away.
Okay.
And there's allowance of up to 15 days. I mean, you have to take 15 days, but up to 15 days to look at this and see if this is legitimate or not.
Okay. So if I'm the person, if I'm the broker, and you come in and say, I want to clean out my mom's account, here's my deal, and I think it's suspicious, then I need to call the Secretary of State's office and.
Right, and,
I got
and
you.
there's no liability on your part then because you're acting in, reasonably and in good faith to make sure it's legitimate.
All right. Thank you.
Protects you from your liability in that case.
All right.
Thank you. Representative Barrett?
Thank you, Mr. Chairman. Senator, first of all, thank you for bringing this excellent legislation forward. If I understand correctly, this originated through the Secretary of State's office based on real-world complaints and problems, right?
Correct, and the person that's been there doing it for 9 years is here and can testify to that.
Okay, and the bill passed unanimously in the Senate?
Mhm.
Okay.
And pretty much every consumer protection agency all supports it, and senior citizens groups and all that. They want the protection that other states have afforded them.
And it looks prescriptive as almost a roadmap, if I'm reading it correctly, for what to do if you suspect fraud or something like that for a financial planner or a broker dealer. Sort of where to go next if you do, and also afford some cover for them as well for bringing that forward.
Correct.
Okay, thank you.
Okay.
Thank you for the question. Okay, last question. Representative Ward?
Thank you, Mr. Chairman. I noticed in the bill that you identified the eligible adults, but is there a withdrawal threshold that can prompt an investigation?
We don't have a threshold in there, didn't put a number value in there. It's, it's really the broker-dealer. It's a tool for them. They've said before, we pretty much knew something was wrong here, but I couldn't legally hold this money up. So we did not put a dollar amount in it.
Thank you.
Thank you, sir. At this time, we're going to have Ms. Johnson come up and speak. Vicki Johnson. You can sit with the senator, or you could go whatever your convenience.
Is this mic, this mic
Yes,
is
ma'am, that's
working, so hopefully I can be heard. Thank you, committee members, thank you, Mr.
Identify
Chairman.
yourself, please.
Yes, I'm Vicki Johnson, and I am a member of the Georgia Council on Aging, which is an appointed advisory agency for the state of Georgia. And I am here to testify in support of SB 84. We know that Georgia has a strong tradition of protecting seniors against elder abuse. We've had many very fine bills passed within the last decade toward that effort, and we see this bill as another step in protecting vulnerable older adults. We know that there is an increasing amount of prevalence of Alzheimer's disease and related dementias among the senior population. And so many seniors who are victims or potential victims of this would perhaps not even understand that it's happening to them. We also know that a lot of elder abuse comes from family. And so the victims would be reluctant to have to be embarrassed to admit that this might be happening to them. And so we see that this bill will bring in outside groups such as Adult Protective Services, who are trained and very knowledgeable about investigating abuse, along with the Secretary of State's office. And so we see this as a good step forward in Georgia's effort to protect at-risk older adults. Thank you. Any questions?
Thank you, ma'am. I don't believe there are any questions from the group at this time, but we appreciate you being here.
Thank you.
What is the will of the committee? This, we have a motion to pass. Do we have a second? We have a second. Any questions or discussion? Yes, sir.
Since we're talking about elderly people, I think we should ask Mo Thrash back there what his opinion is.
Mr. Vice Chair, I don't think we should get personal with that. But thank you. We have a motion and a second. All in favor, say aye. Aye. All opposed? Thank you, Senator. Your bill passes.
Thank you very much.
Passes committee. It's 26. Okay, next we have Senate Bill 90. Senator Dixon.
Thank you, Mr. Chairman, committee members.
You have the floor, sir.
Thank you, Mr. Chairman. If it's all right, I'm bringing Senate Bill 90 before you. We also have a friendly substitute that was attached to it, House Bill 471. Was going to let Clint Crow present that portion of the bill, if that's okay.
Sounds great. Representative Crow, you can do it from your chair.
Yeah. Thank you, Mr. Chairman.
Read the LC number, please.
Oh, yes, sir. Got LC 50 0571S.
I have 72S.
72S, that's right, I'm sorry. I have
Okay.
a copy in front.
Make sure we're all on the same page.
Sorry about that. Yep, that's correct.
Okay. Members, y'all all have that? Okay. Go ahead, sir.
Thank you. Senate Bill 90, what it does, it proactively puts regulations in place on revenue-based financing companies. Revenue-based financing companies, it's currently a current form of financing that many small and medium-sized businesses will obtain when going to a traditional bank is not an option. These are contract agreements when a business needs a quick infusion of capital. They can access funds quickly in exchange for a determined amount of future revenue in that business. This bill standardizes the disclosures related to the total cost of capital, puts basic guardrails on brokers who help facilitate commercial financing transactions like these. Some of the disclosures that would be required if this bill is passed is the total amount of funds provided, the total amount of funds dispersed, the total of payments, the total dollar cost of financing, the payments, and then if there's any prepayment, if there's a penalty for paying it off earlier, if there's not, that would all need to be disclosed as well. The Georgia Bankers Association, the Georgia Credit Unions, and the Georgia Department of Banking are all good with the bill. With that, Mr. Chairman, be happy to answer any questions or let Representative Crow present the other part of the bill.
If memory serves me, this is the same bill that Chairman Rhodes carried in the House, and
that is correct, Mr. Chairman.
And at this time, Representative Crow, would you like to add your sub on here?
Yeah, thank you, Mr. Chairman, and I appreciate Senator Dixon being willing to work with me on this. House Bill 471 was heard twice in the Agriculture and Consumer Affairs Committee by the good chairman here, and it passed out overwhelmingly out of that committee. It deals with a real estate predatory practice that has become fairly prolific in the last couple of years. Typical scenario is somebody will reach out to a homeowner. Typically, the folks that they are seen to be targeting are elderly or lower income homeowners, and they offer them to take part in a homeowners program, offering them cash or that. What they actually do is they then coerce them into signing a 40-year listing agreement. That listing agreement is then filed at the Clerk of Superior Court's office and is creates a cloud on the title for those 40 years. So many times these folks will then go to try to sell their home, or more typically they'll pass away. An heir will inherit the property, try to dispose of that, liquidate the estate, and then when they try to do that, they're contacted by this company and say, hey, you have to pay us 3% of whatever we say the value of this property is in order to do that. There are some current laws in place, but they don't necessarily cover this. It's sort of they're having trouble establishing the probable cause on this, so we're going to make it a little more clear and try to do some things to stop these filings, especially. It's going to cut off the spigot to where they can't record that as a cloud on the title. Section 1 of the bill now listed in the Fair Business Practices Act. Section 2 deals with wholesalers, typically written wholesalers. So there's two things here in this bill that we're dealing with that folks are seeing now. One is the 40-year listing agreement that's being recorded. The second are wholesalers who are basically acting as real estate agents without a real estate license. They contact somebody saying they want to buy their property. They get an option to buy that property and then go out and market it for sale, which does two things that are technically not legal. They're acting as an agent without having a license. The second thing is they're doing what's called a net listing, where they get to keep whatever they can sell it for above the list price, or what they've agreed to do that. That's illegal for licensed agents in the state of Georgia to do, and so they're skirting around those two practices by doing this. What this would do in Section 2 is it basically just makes it more clear when they do written solicitations that it is a solicitation. It requires some notification and some things to be put on the mailer that it is a solicitation. So it's very clear that these folks, they think they're selling their house. What they're doing is they're being tricked into signing an option. The person doesn't intend to buy their house. They want to try to go market their house for sale to somebody else. So Section 2 covers that. Section 6 is also very similar to that, but it deals with telephone solicitations in that. Section 3 adds option to enter a brokerage engagement to the Brokerage Relationships and Real Estate Transactions Act. So it defines what a brokerage, an option to enter a brokerage engagement is. And Section 4 establishes default terms for brokerage engagements and options for that. And then 5 is really where the meat of it is for that portion. That covers or prevents that brokerage engagement from being able to be recorded as a cloud on the title or as a lien. So, and I'll be happy to answer any questions if anybody has any.
Okay, I think we have one question. Number 2.
Thank you, Mr. Chair. It's actually just a clarifying question. Which sections of this bill were yours, and which section of the bill were?
Okay, so sections 1, everything in section 2 from line 187 on, sections 3, 4, 5, and 6. So the original Senate Bill 90 was section 2 from line 26 to line 186.
Are you?
Oh, I'm sorry. Hang on, the line numbers changed a little bit. I had a different version. This is a sub I got when I just walked in here. They added a couple of things. 177, I apologize. Section 2 of 177 is where the portion of House Bill 471, the original 471, would start in Section 2. So Senate Bill 90 was everything in Section 2 from line 26 to line 176.
Chairman Dickey.
Thank you, Mr. Chairman. I just want to let the committee know, we did hear Representative Crow's bill in our committee, and it's one of the best bills, consumer protection bills I've heard. We really heard about some really onerous things going on in that real estate transaction of folks, and I really appreciate the hard work he put into to his bill. It's very good, and I'd certainly recommend passage of that for that part of the bill.
Are you going to leave out your office suite mate work on his bill? Chairman Rhodes?
I wouldn't dare. It even did more work on that part of the bill.
Number 26. Yeah. Number 26. Number 26.
I want to ask you, on the first part of the bill, I saw where Public Service Commission shall abstain. Now what, and then the back thing says the Attorney General. I can't find where it says Public Service Commission in the bill. But I noticed in the little briefing telling about the bill, it said Public Service Commission could regulate it.
Senator Dixon, do you want to address that issue?
Who does these transactions? Who oversees the transactions of the commercial loans?
Yeah.
Not, Both of them. But I just don't notice.
If you start reading line 11, that's what's talking about Public Service Commission, line 11, 12.
Yeah, that's what she was reading.
That's what I was reading.
Yeah, I know that, but I'm saying, it's talking about it's not talking about this, it's talking about a different section.
Okay. All right. You amend this code section. Okay, I see what you're talking about. Thank you. I understand now. I just want to make sure that the Public Service
We're protecting
Commission
seniors.
had the right amount of money to take care of that, because they've got a lot on them to look after.
Yes, ma'am. Representative.
Yeah, thank you, Chairman Houston. That's,
Looking at the Public Service Commission.
yeah, section 6 on, starting in line 292 on page 12. That's the part that deals with the telephone solicitations for these wholesalers.
Okay, one more question, then we had a couple of people that wanted to speak to the bill. Number 3, is that Representative Clark? All right, I'm sorry.
It's all right.
Go ahead, Will.
Just
Wade.
want to find out, I've been a banker a long time. How long can a real estate company tie up a piece of property with a listing agreement? Is there no, I'm supportive of the legislation, and I've got a ton of realtors that are friends, clients, love them. But at some point, I mean, there's got to be, do we not have a cap just in general for just all?
Yeah, and I could speak to more kind of the real estate world I'm in, as I'm a dirt guy, so trying to find dirt for new home communities, and we're very careful. I first started 20 years ago. Before the Great Recession, sometimes it would take 2.5 years to entitle a piece of property, and it was very clear when we were writing those contracts we had to have a drop dead date for it to hold up in court, as far as the contract law, not as far as listing.
Okay. I'm curious that we need to, not with this specific bill, but a greater question is should we not consider putting a reasonable cap on how long somebody can have a listing agreement? I mean,
Okay, Representative Crowe.
thank you.
Yeah, and thank you. There's a portion in here when we talk about the option to enter a brokerage engagement. It does define that in there, and it says it has to be a specifically defined date. If there is not a specifically defined date, then it caps it at 1 year for the option for that. Now, when we do an actual brokerage engagement, that's a contract, so it has to have a specific start date and a specific end date. There is no necessary cap on that. Somebody's agreeing to that. And with this legislation, we're not actually stopping these folks that are going out and doing this. We're not saying they can't enter into a contract with somebody. What we're saying is they can't use that to hold somebody hostage and hold them over a barrel to make them have to pay to be able to sell their house down the road, or their heirs to be able to sell it. We're not trying to affect contract law. We're just trying to make sure they can't use it they can't weaponize it against these folks.
Thank you, Representative. At this time, I'm going to ask Ms. Hawkins or Hopkins? Hoskins, I'm sorry. Sure.
Hello, I'm Amy Huskins. I'm the State Bar of Georgia's legislative co-chair for the Real Property Law section. Jeff Ledford and I and my team, we helped draft this bill. It took us almost 2 years. And Representative Crowe and Representative Dickey, they've heard our speech before, but I'm going to answer your question first, if that's okay. I've been doing this for 30 plus years. And so right now you have it's called the BRETA law. It's been in effect since the 90s. It only talks about commercial real estate. And so commercial real estate is a totally different animal than the type of predatory practices that we're talking about with this bill. This bill, literally, as Representative Crowe said, we think there may be as many as 7,000 recorded in the real property records in Georgia right now. And when we started looking at this, Jeff and I did 2 years ago, there were 10 filed. The next week there were 100. The next week there were 1,000. All of a sudden, these brokers from out of state were doing things that were predatory, and they were all residential, every single one of them. And it appears that through our work with Atlanta Legal Aid, who's a great organization, they have clients all over the state right now, thousands. Thousands of people have been affected by this. And so I know most of you all know all about this already, but I do want to target a couple of different things. This is a banking committee. And you think that, of course, the victims themselves, these homeowners who don't know what they're signing until they have a 40-year listing agreement put on their property, it does not only affect those victims, it affects bankers. Banks cannot make a HELOC. You can't do a refinance. You can't do a purchase loan because these listing agreements are out there. They're akin to mortgages. They're very similar to mortgages. They are invalid on their face because they're not commercial real estate properties, if that makes sense to everybody. And so the only way to get rid of these things is twofold. One is this bill, and it's in your substitute bill starting in line 259, and this is the heart of the whole thing. And it basically, and I'm paraphrasing, it says that if one of these invalid liens after this statute is passed, not for anything that happened before, we're only going forward here, those liens are void. They're void on their face. The reason that's so important is because right now, all we can do is file a lawsuit called a quiet title action to clear the cloud on the title. Those things take years, and they could cost $25,000, $50,000 in legal fees to do that, to clear them up. Or you pay the predatory broker a settlement fee that could be $20,000, $25,000 a hit. And so that's why the State Bar, and I'm here officially speaking on their behalf, and Jeff will speak as well, we really do request that you consider this bill, specifically the portion that is the heart of the whole bill, and that is to make these things completely void. And I'm happy to answer any other questions.
Thank you, ma'am. I think we have one
Just
question.
one quick question, Mr. Chairman. Thank you for presenting the bill. Just one question. How does the bank know that that's out there? How do they
It's
perfect that?
recorded in the real estate records.
It's like a deed to secure debt or whatever.
It's literally almost, and they, early on, starting 2 years ago, they literally have judicial foreclosure rights within the body of that document, even though it's not a loan.
Mm-hmm.
I mean, it's so horrendous, that these people do not know what they're signing. They have no idea because they're told to sign so quickly that they don't have the right, they don't even have time to get a lawyer to look at it or a CPA or anybody else to look at it.
Thank you. Thank you, ma'am.
Thank you.
Jeff, would you like to come up and speak?
Hi, Jeff Ledford on behalf of the Georgia Realtors, and I think a lot has been said to this bill, so I'd just like to say this would do a lot of good and help a lot of people, and we would appreciate a do pass.
Okay. All right. Thank you. Number 22.
It's proper time, Mr. Chairman.
I think it's a proper time.
Move do pass.
We have a motion and a second. Any discussion? All in favor, say aye.
Aye.
All opposed? Your bill passes. Thank you.
Thank you.
All right. Mr. Rules Chairman, Senator Brass. Senate. Senator, we would hate to miss out the opportunity of hearing about your bill, so if you'd like to go ahead and go over your bill with us.
Well, thank you, Mr. Chairman. It's an honor to come before who I once considered the second best banking chairman in the legislature, but now I think you're number one. So.
Well, thank you. Thank you so much. You're mighty kind.
But in all seriousness, I bring to you SB 254, it's LC 500553S, I hope is what y'all have. And simply, this is a bill dealing with earned wage access. And there's a lot of definitions in it, and really that's kind of the main purpose of this bill. Earned wage access is simply, it's earned but unpaid wages. And it gives the consumer the ability to access that money before payday comes along. And we've this industry is new. It's been operating since probably about 2020, and maybe a little bit longer. But it's been operating in kind of this gray area because there are some that consider it to be payday lending. which I do not, because this money has already been earned. You simply, if you get paid every 2 weeks and you've worked for a week, you've earned that money, you will get paid that money. And these companies come in, and there's different types of companies, and I'll get into that in a minute, but they come in and give you access to that money that, like I said, that you have earned. And, you know, there's been bills floating around really the entire country, and there's been yet one to pass. And so what I'm trying to do is, on this unregulated industry, with no consumer protections, I'm trying to, number one, give us a code section in the state of Georgia that we can operate, because this industry we are going to be regulating moving forward. And so that's why I've laid out definitions of the different types of businesses, the different ways to verify wages for these different types of businesses. And then we've laid out the different fee structures. And within those fee structures is where we do have our consumer protections. Now, one thing to note, and why this is not a loan and it's not credit, is because it is non-recourse. And that is important to note, that it is non-recourse and there is no interest on these payments. It's simply a fee. And so that's kind of the importance of the bill. And really the crux of the bill is to, number one, define the industry, define the different types, and I told you I'd get into that. There's a direct-to-employer, which if you get down lines 27 through lines 32, that covers the three different types of business models within this industry. One is direct-to-employer, so the company will go to an employer, and that's how they verify that this consumer has worked and has earned these wages. There's a direct-to-consumer model. That is where, you know, they offer it through, maybe it's usually app-based, and they market directly to the consumer, and then they use different methods such as email verification, timesheets. They actually even use geospatial data as your phone travels, making sure you're traveling to and from work. And so we've laid all that out into as reasonable means to verify these wages. So really that's, again, I'm just trying to get something that the legislature understands what we're dealing with moving forward. Because right now there's no definitions, there's no consumer protections. Now, I'll admit I've put up some loose guardrails on the consumer protections, but again, it was so that we could get a bill that we could go ahead and get us a code section, so that moving forward from year in and year out that we're going to be dealing with this, that now we're introduced to this industry, which many of you are maybe hearing for the first time. I've actually worked on this when I became banking chairman, is kind of when it started for me. And it took me a little while to kind of grasp the industry, exactly what they're doing. And so I wanted to simplify this bill. I put all the industry players in a room earlier this session, and we kind of came up with some agreements around some definitions. And, you know, and I know there's talks that this belongs under banking. I did meet with the banking commissioner and BOFEERS as well last year, and they, you know, weren't super excited about having it under banking, but said they would take it. Once I got everybody in the room, we kind of agreed that, you know, since banking wasn't all that excited about having it, let's just have the consumer protection piece and put it under the Fair Practices Act, which gives the Attorney General that consumer protection piece that we also need. So with that, I'll be more than happy to answer some questions, which I'm sure there are.
Okay, I've got a question, Mr. Chairman.
Sure.
Could you give me an example of, say I were to borrow $500 and so my fee is no more than 10% of that $500 I was trying to borrow? Or,
Right. So that's if they mandated a fee. That's if it's a mandatory fee. So if they come in and say, you know, and you gotta be careful using the word borrow, because you're borrowing. If you're borrowing against yourself, because it's your money.
Right.
You just don't have access to it. So essentially, they're letting you draw down the money. So it's more of a draw, and if you draw down $500 and they're going to have a mandatory fee, then the most they can charge you would be $50. Now that doesn't compound every, you know, it's not a 10% if you didn't pay it back, because again, it's non-recourse and it's not interest. So it's just a one-time fee, and that's if it's mandatory. Most companies in Georgia right now are operating under what I've defined as a consumer elected fee. And a consumer elected fee is actually when there's several types. One is if you need to get that money expedited, let's say same day, versus ACH, which might take 3 to 5 days, but you need it same day. There's the $2.99 is kind of the going rate right now.
Okay.
On the other consumer elected fees is a tip based, and on a tip based, you actually set the fee at whatever you want. In order for it to be a consumer elected fee, there has to be an option of $0.
Okay. Thank you. We've got several questions. Representative Clark.
Thank you, Mr. Chair. Thank you.
Thank you.
Senator. Good to see you.
Likewise.
So my biggest concern right now, actually I have two. On lines 46 through 47, it describes a mandatory fee.
Mm-hmm.
And so I know you mentioned that most places in Georgia do not charge a mandatory fee. It seems to me like the moment we start charging mandatory fees that are not elected, like consumer elected fees,
Mm-hmm.
it turns into more of what a lot of people consider a payday loan, even though it's not a loan
Mm-hmm.
because of the non-recourse, because we are charging people to have access to the money that they already earned. And so in the example given earlier, I'm paying $50 to get access to my $500 that I earned by going to work.
Mm-hmm.
The difference between that and the consumer elected fees, which are like, as was described to me, hey, I have Cash App and I can elect to have some of that money moved to my account like immediately for a fee, or I can get it in 2 or 3 business days and I don't have to pay anything.
Mm-hmm.
To me, that would make more sense. So I have a real concern with the mandatory fees. If all these companies in Georgia aren't charging this anyway, why have that in here?
The reason we put that in, or I put that in, was because there are a couple reasons. Number one, if someone decides to switch to that model, I wanted to have some sort of consumer protection in there. Again, I admit it's kind of a loose. I mean, that's probably a little bit bigger than it could be, but again, it was a way to kind of get everybody in agreement. And if you go back to that $2.99 fee, $2.99 fee that I discussed, that's kind of a standard expedited rate right now. If that ever were to go mandatory, well, a lot of these fees, or a lot of these draws that they're taking are in that $30 to $50 range, and so that 10% would cover that $30 if they charge $2.99.
Right.
So that was kind of the thought process behind that. But again, with most of the industry not going towards the mandatory fee, or at least not in this state, I wanted some sort of consumer protection in there, really to kind of prevent any bad actors from coming in and trying to really do any kind of predatory type stuff.
All right, so thank you for that.
Sure.
I do have some concerns, and I would wonder if you would entertain not allowing mandatory fees in the state of Georgia. But that's a completely separate question. Before we get to that, I noticed in the consumer elected fees, unlike with the mandatory fees, there is no cap.
Correct.
So, whereas we capped the mandatory fees, is it at all possible for some of these consumer elected fees to exceed 10%?
It's possible, but the consumer would actually have to elect to do that themselves. I mean, because the way we have it drafted, they can literally set the tip at $0. And I've never used Earned Wage Access, but I have used GoFundMe, and they had moved to a tip based, and you could set the fee to $0, which I was just kind of becoming familiar with Earned Wage Access, and I'd never been offered that on GoFundMe, so I decided to set it to $0 to see if you could do that, and you can. And so, again, it's if the consumer elects to go more than 10%, I don't know why they would, but
Maybe in a situation of desperation, they got a bill that's coming up, or they got something.
yeah, but they could in that same desperation, they could elect to go $0
on the tip.
That's in order to not have a cap, in order to be a consumer elected fee, there has to be an option of $0.
So
has to be.
When you have an option of $0, usually that option comes with like a stipulation. So like you can get the money right now for this fee, or I'll give you the money in 2 days or tomorrow or something for $0.
Right.
So then a person maybe in desperation might say, I need this money right now. Right. And so this fee, I'll pay it just because I need the money now as opposed to tomorrow. Could you?
Yeah, I think, look, I respect the process over here. So if you want to make suggestions, I'm all for it. But, I would suggest to anyone that's in desperation, there are companies out there that offer expedited same day for $2.99. I would suggest shopping and going to a different company if it's gonna kick you over that 10%. That's where the free market can it takes care of itself in that sense, in my opinion. But I understand your concern, and if you have suggestions, I'm all for it.
I think Mr. Chairman Williamson had a point to that.
Mr. Chairman, to the general doctor's point, could there be a methodology in the bill that we stipulate that there have to be options to the customer? Because I do have a fear that a lender, in this case, somebody making an advance on this earned wage, could have preset options that the wage earner is forced to hit an option other than $0, and it could go over. Could we just not cap it at 10%, but make sure it's clear in the bill that there were options available to them, or they could enter in their own amount? Otherwise, people get desperate for this money, and they're probably not be sophisticated enough to shop around early on as the whole platform develops. But maybe some kind of guardrails such as that.
I'll yield to the wisdom of the committee.
We have quite a few more. We have a few more questions. Let's get these questions. Number 16.
Thank you, Mr. Chairman. I was going to talk about the fees, but I think we've
hit that.
We hit it pretty hard.
Okay.
But I will just say that when we look at line 47, it says 10%. Yet when you go a little further, it has the fee for expedited delivery, subscription and membership fee, tip and gratuity. So I was concerned also too about that preset button. Thank you.
Thank you, ma'am. 17.
Thank you, Mr. Chairman. Senator Brass, I'm concerned about the consumer protection that's not in this bill. As you were speaking about the bill, I actually Googled some of the, you don't call them payday lenders, they are earned wage access I didn't see that on here, but it comes up payday, advanced paydays. And there were like 6 top apps on here. One of them is called Earning, EARNIN. And as soon as I pulled it up, they are one of the top ones, but there is also a lawsuit where they had to pay $12.5 million for in a settlement for overdraft fees. And so where in this legislation is that protection here for our folks here in Georgia? Because one of the reasons we are on this committee is for consumer protection.
Correct.
And so I'm not comfortable having more outside folks come in here and take advantage of our folks. Now,
Right.
I just heard you say that if someone needed this money, they need to possibly go somewhere else. They are not researching. They are desperate.
Right. And
they need money now. They're not reading the fine print.
Right.
$12.5 million is a lot. And we don't have that in this legislation. And that's what I feel is about to happen, just as we did years ago with payday lending.
Well, I'll add, Representative there, that all that was done under our current system, which is nothing. We have no regulations around this right now, nothing. And so I'm trying to add something. I'm also the main purpose of the legislation is to set up a code section so that when we move forward, we all have clear definitions. We're all speaking the same language. Again, if y'all on the consumer protection piece, if there's things y'all want to do to change it, I'm all for it. The main purpose, I'm trying to give us something that we've got to work off moving forward so that it's not just some blank canvas that we're all flying blind trying to create rules and regs around.
Well, I appreciate that.
Yes, ma'am.
But I hope we can put some of these options in, the options that were previously stated where
Well, I think
protect.
on the overdraft though, if it's non-recourse, that means they can't come after you.
But it has to be a button. It needs something
There
to
does
be,
not need to be a button
it needs
for
to be
non-recourse.
something that they can have an option, is what I'm saying.
Well, I mean, but I'm saying if they come after you and say, I mean, you just say, I don't have it and there's nothing you can do to come get it. I mean, it's non-recourse. That's the greatest consumer protection we can put on this. But right now, they don't have that. They have nothing.
Thank you. 18.
Thank you, Mr. Chairman. To Chairman Brass, I too am concerned about the fees, and we've talked about that. But when you look at this, it's my understanding that this is a marketplace for hourly workers. And from what I've read, it shows that they are doing 12 to 120 of these withdrawals per year. So, when you look at the pros and cons of this, one of the pros is that, if a person has an emergency, these money can be made available to them. So, but when I look at 12 to 120 times a year, it looks more like a habit than an emergency.
Right.
So would we be amenable to limiting the number of advances that we will allow in Georgia as we move into this so that, we get some kind of handle on where we are with this here in Georgia?
Well, once again, I respect the process of the legislature, and I will yield to the wisdom of the committee. So if you would like to do that, there's really nothing I can do to stop it.
24.
Thank you, Mr. Chairman. Senator, thank you for this bill. I had no knowledge of earned wage providers or pay on demand until I had to read your bill. Just to help me understand, when an employee asks for a drawdown, is he receiving the net amount or the gross amount?
Well, typically they are on, I don't even know the answer to that. I would imagine it's going to be the net amount. But most companies, my understanding, they're not going to let you can't draw down 100% of what you've earned. Most of them, I believe, are in that 50% of what you've earned would be the max. And they do that to protect themselves. But I really don't know the answer to that. I mean, I would hope it would be the net amount, and not the gross. If it's being non-recourse, that would be pretty risky on their part to allow them to draw down the 100% of the gross.
Follow-up question. In terms of verifying how much the employee has already earned, one of the options is through email. Let's say that the person who's responding to the verification makes an error in typing the hourly pay. The worker earns $25 an hour, and the person responding with the email for verification indicates $35 an hour. And so the employee gets too much money. How is that going to be settled?
It's non-recourse, number one. So again, I think that's a business practice that it would be risky on that company that's giving them access to the earned wage access service provider. Again, I think that's going to be risky on them to loan that out. I mean, to let them draw that down. If I'm understanding your question correctly,
if there's a
I think on the
discrepancy-
email, going back to the email verification, my understanding, and there are people from the industry here, I'm sure, that can speak to their business practices better than I can, because I don't know their business practices. But my understanding of the email verification is making sure you have that company email and that it's active. It's not sending me an email of where you work and how many hours you worked. That's not email verification. My understanding is they're verifying their email, that they actually have that company's email.
Not verifying how many hours that person has available
They
to them?
verify that through timesheets, is my understanding.
All right, thank you.
Okay, two more questions. Number 3.
Thank you, sir. Appreciate the bill. Appreciate you coming in and presenting today. Couple questions. One, in my banking career, I've seen the rate of payroll as well as companies adapting to industry changes and shifts. I mean, even the adaptation to things like payday lending. My question is I'm assuming that the business model is such that they're going to monitor the client based on their pay period, whether that's weekly, biweekly, once a month, etc. And is there an interest, in your opinion, to put the framework to have a cap on the percentage that they could draw? Personally, as a banker, we run off of debt to income ratios, 38, 42%, ensuring that somebody doesn't inadvertently put themselves into a position where, they're going to access more. I'm not going to make that recommendation. It's your bill. Just thinking through your framework that you're wanting to put in.
No, I mean, me personally, I wouldn't have a problem with that. I don't.
Okay.
I think that, again, that's a good consumer protection, and many of y'all's suggestions are great consumer protections. And I'm not trying to bring an industry-friendly bill here. I put them all in the room and tried to get them basically neutral.
Right.
I wasn't trying to make anybody happy, because we have had bills float around up here that favored one model over a different model, and that wasn't what I was interested in. I was interested in putting together something that just gave us a framework to move off of moving forward. So I certainly, if that's what y'all want to do, I'll yield to the wisdom of the committee. And I hate to keep saying that, but I mean that.
No, okay. I appreciate that.
I think y'all are vetting your bills very well, and I can appreciate that. Y'all got great questions, and I'll work with you in any way I can.
Thank you, Mr. Chair. We have two more questions, and I think we had a couple of people want to speak to the bill. Number 12.
Thank you, Mr. Chairman. Mr. Chairman, always good to see you. Question on 49, of course, it's stating there's actually no cap. Would you entertain a 10% cap? Also, you could use the expedite charge of $2.99.
Yeah, I mean, if you do that, when you get into that, now you're enticing them to go to a mandatory fee, but
it's better than no cap, and then we could only put 5 times annually a year that you could process.
We're making progress here.
And I know I appreciate it. Do you further, one more I would like to, I'd marked here too, and we could even strike line 69 if we wanted to.
what would be the purpose of that, if you don't mind me asking?
No earned wage access services that comply with the code section shall be considered. Do you have that code section in front of you?
Yeah, you do too. It's the whole bill.
Right, but with that code, for instance, 69, no earned wage shall be considered lending activity. I would just say we would strike that part of no earned wage.
Well, that's kind of the
point of the bill.
One of the point of the bills is to define
Earned wage,
this
yes.
industry, and that's really, that's important to note, because if you check all these boxes, then you're not payday lending. I mean, that's really kind of what we're going for here. But again, if that's what you want to do.
Representative Clark?
Mr. Chair, I would like to make a motion if it's the proper time. I would like to.
We had another person that was going to speak, so
okay.
let's have the person come up that wants to speak. Liz Coy? Okay. Make sure I pronounce that correctly. Yes, ma'am.
Couple of handouts to accompany my testimony, may I?
Okay. Representative Clark, if you mind, if you'll get those. Yes, ma'am. Go ahead.
Good afternoon, Mr. Chairman, members of the committee. I'm Liz Coyle. I'm the executive director of the state consumer advocacy organization, Georgia Watch. And I'm here today to urge you to vote against SB 254. While we respect Senator Brass's intent is to pass legislation that would protect consumers, we believe this bill would have the opposite effect. And so respectfully, I appreciate the questions that have been asked and some suggested amendments to the bill. Perhaps this bill isn't quite ready to move forward, in my opinion. As Senator Brass explained, earned wage access products allow consumers to obtain a portion of their already earned wages before payday, but often with these exorbitant fees that have people so concerned. Workers are steered into paying purportedly voluntary tips with hidden tricks to make not tipping difficult. While EWA products can be beneficial when properly implemented and regulated by the employer, non-employer integrated EWA models allow third parties to issue funds to be repaid later through the employee's bank account. Direct-to-consumer fintech paydays are payday loans, not earned wage advances at all. They claim to pay wages but have no connection to wages or payroll and are repaid like other payday loans by debiting bank accounts. Repayment through bank account debit can also trigger overdraft or non-sufficient fund fees. And I think it's important to note that the employer-based model in Georgia is already legal. There are third parties pushing for this in Georgia to legitimize practices that have been shown to harm consumers in other states, hence the lawsuit that was mentioned earlier. One of the biggest concerns we have about this framework that's been offered is among the things that are not included as being prohibited are allowing the provider to debit bank accounts. And again, that's where we've seen real harm to Georgians. I don't know how the recourse applies, the non-recourse applies, if the provider is able to go in and just take that money out of your bank account and potentially contribute additional fees from overdraft. So again, as you'll see in the handouts from Georgia Watch and the National Consumer Law Center, earned wage access services present significant risks for consumers and should not be permitted. Okay, and should not be permitted without explicit protections and regulation. As you consider this legislation today, please ensure it would explicitly ban attempts to circumvent Georgia's consumer protections that could allow EWA companies to charge exorbitant fees. All products should be regulated as credit, comply with consumer protections in that space, should be subject to regulation by the Department of Banking and Finance, and the legislation should explicitly prevent debiting the user's bank account to recoup advance funds, which can lead to users incurring fees.
Thank you, ma'am.
Thank you.
Next, Graham Thompson would like to speak. Sure.
Good afternoon, Chairman and Vice Chairman and members. My name is Yvonne Chow, and I am from Earnin. And as you all know, we're a fintech based out of the Silicon Valley in California. It seems like there's a lot of miseducation on this area, and I would love to have the opportunity to address all that was being discussed, but I don't know we have all that time here. So I just want to address a few highlights that stuck out to me. I think that there's a huge miseducation on understanding and trusting that consumers actually know what they're doing when they utilize our services. They're a lot more budget savvy than we think. In Georgia, the average tip is $2.24, and about 50% of transactions don't include tips at all. About 18% of folks have never tipped in 2022. And so with that said, it's not exorbitant fees that we just heard. And I also wanted to address the lawsuit that came up earlier. That was actually a marketing UDAP violation where people thought that if they used Earnin, then there was some sort of agreement made with the banks that there would be no overdraft fees. But as we all know, the overdraft fees are bank fees. And so now after that settlement, we have made it very clear on our app that if you use Earnin, you may still be charged a third-party bank fee. And in most cases, when Earnin accidentally gets something wrong and we trigger an overdraft fee, we refund that amount because we're around to make sure that people don't get into overdrafting and payday lending. And so when we say no to options to consumers, we're essentially saying yes to overdrafts. When we're limiting the frequency of how much people can access, it sounds consumer protectionist, but the need is still there. And so if we take that option away, then where are they going to go? When people need the money, they'll get it somewhere. I'll pause here due to time, but happy to answer any questions offline.
Thank you. We have one question. For the author?
No, sir. I was actually I'm ready to make a motion.
Okay, what's your motion?
Well, I want to ask a friendly question of the presenter. I'm interested in making a motion to pass with 3 potential changes if it's a friendly amendment if he's interested. One, basically cap amount at 25% per payroll pay period. So that at one time, the most that they can get is a maximum of 25% of that pay period. It's payroll.
Pay period or wages they've already earned.
The wages that they've earned. So if that's $1,000, then they could get up to $250 during that pay period. And then number 2 would be, I like the mandatory fee, having it in there to acknowledge that it exists, leaving the 10%, but putting in a cap no more than $35. And then last, that in Georgia, that if they use the tip model, that their tip has to automatically start out at 0. And those are my suggestions. And with that, I'd make a motion to pass with those amendments if Ledge Council could make that work.
I tell you what, in the interest of time and in the interest of confusion, why don't we ask the author to come back in the next few days with several amendments, and we can look at it at that time, if that pleases the author.
I'd be honored.
tell you what, why don't y'all get with the author at his leisure and, come up with an option, and we can get back together.
I like yours on how many times.
Yeah. Thank y'all.